Wednesday saw the S&P 500 close at a record. The biggest headline took place in the minutes following the session. That's when Nvidia, the world's most valuable company by market cap at over $4 trillion, reported its latest quarterly earnings. Joining me now is Angelo Zeno, SVP and Technology Head at CFRA Research. Angelo, welcome to the show.
Great, thanks for having me, Ashley.
So Nvidia beat its top and bottom line estimates. Why did shares fall in extended hours?
Yeah, I mean, listen, I think when you look at the results here, they were perfectly fine. I mean, relatively in line with our expectations for the July quarter. The guidance for the October quarter was actually slightly ahead of what we were looking for. I think, this is just largely a digestion of previous gains when you start thinking about it. The stock had essentially doubled here over the last couple of months. Really kind of running hot into the print. Consensus expectations were grinding higher into Nvidia's results, and when you actually look at the actual numbers here for the July quarter, there was a slight miss on the data center side. Beat their original expectations, but again, the street had been bumping up their numbers, probably got a little bit too bullish. But again, they more than made up for it in terms of the October quarter guide. Was about $1.5 billion above our expectations. And I think most important here, when you kind of look at the guidance, and the commentary that Jensen Huang provided here, not only for the quarter, but looking out here over the next couple of years, I think it provides further confirmation that this AI story remains intact, that the CapEx spending plans from the biggest spenders out there in these Western markets also remain intact. And the fact that they essentially offered guidance with no revenue attached to China here for the October quarter means that, hey, listen, there is significant upside potential that's still left here for Nvidia's fundamentals.
And Angelo, what do investors need to know about Nvidia's operations in China?
Yeah, I mean, as far as the China story is concerned, again, I mean, they essentially have de-risked the story in China. It's basically zeroed out here on the data center side of things. And really what you need to know here is the fact that there are still geopolitical tensions that are taking place between the U.S. and China. Nvidia has essentially, to some extent, halted production due to some security issues that China themselves have with the H20 product, and the fact that the U.S. government at this point in time is looking to take a 15% tax for any sales going into China. But I think most importantly, Nvidia did cite the fact that, hey, listen, we can sell 2 to 5 billion potentially in China here this quarter, if the right conditions are there. But more importantly, we think, is the fact that if they can get approval to sell a Blackwell chip, which is their most advanced chip, of course, performance tempered in nature, into China, we think that will offer significant revenue opportunities. Jensen essentially said that it is potentially a $75 billion market next year. And if they can capture, we think, potentially, half of that market, again, there is a sizable revenue potential that's not yet embedded within those consensus estimates.
And as you touched on, Nvidia's guidance assumed no H20 China revenue. Why do you feel this represents an upside potential opportunity?
I mean, listen, I think when you look at expectations looking ahead, I mean, the way we're looking at it, we've probably got about another 2 quarters of 50% plus growth on the top line before they start bumping across some more difficult comparisons going into calendar 2026 versus what we're seeing from the Blackwell launch this year. They're going to need to see a broadening out of their customer base here over the next couple of years in order to continue to grow at levels where a lot on the street are looking at. The only way they can do that is through opportunities where in Western markets you see some of those level 2 players, call it CoreWeave and OpenAI, start ramping up their investments, as well as broadening out in terms of China's sovereign AI opportunities across the globe outside the U.S. and potential growing revenue in China. And again, no H20 sales right now. Potentially, maybe we see a couple of billion this quarter that could provide upside. But more importantly, if there is that Blackwell chip that gets launched in China, we're talking about potentially tens of billions of dollars in calendar 26, which is the upside potential.
And just to broaden this out a little bit, what do NVIDIA's earnings mean for the larger semiconductor and AI industries?
I mean, listen, they are kind of the center of the universe, and they have been. I mean, when you think about the major hyperscalers, the Microsofts, the Amazons, the Alphabets, the Metas of the world, even the Oracles out there, a lot of these companies are buying NVIDIA's GPUs and essentially kind of leveraging these GPUs and renting them out. So, and monetizing those GPUs. So it's extremely important that we continue to see the health of NVIDIA's GPU sales, because essentially that is what's driving a lot of the revenue potential for a lot of these other hyperscalers. And then, of course, the broader ecosystem as far as AI semis are concerned. Most of these companies now sell into NVIDIA's rackable system. So whether you're a supplier, whether you're a customer, NVIDIA is extremely important and really at the heart of this AI trade. So as long as we can continue to see healthy fundamentals for NVIDIA, that bodes extremely well for the broader tech trade and the overall AI ecosystem.
Thank you, Angelo Zeno, SVP and Technology Head at CFRA Research.
All right, thanks for having me.
Don't go anywhere.